Now, at the presentation of the 16.3 trillion naira 2022 budget proposal to the joint session of the National Assembly on the 7th of October, President Muhammadu Buhari disclosed that the Finance Bill 2022 is also undergoing preparation and will be passed alongside the 2022 budget. The Finance Bill is targeted at fiscal equity as tax laws are progressively reformed, making them consistent with best global practices, highlighting the need for also processes and tax incentives that will be made available in the fiscal year under consideration. Now, this development must recall that is also an innovation introduced by this administration as current tax and fiscal laws are being reviewed to produce a draft for next year. Well, joining me now live to discuss this and more on this development and other issues, I have Senior Manager, Tax Regulatory Services, Deloitte Touche, Falade. Good to have you on the show today, Karen.
Hi, good afternoon.
Now, let's start off with the changes we've seen in terms of the Finance Act we've had. Take, for example, the Finance Act of 2020, which took effect at the start of this year. Now, this really raises the conversation for the need for reforms, no doubt, and also looking at other necessary steps we can take to have much more robust fiscal policies. Share with us the need to have more reforms and then also tweak here and there as we have each fiscal year come to bear.
Okay, thank you very much once again for having me. Like we mentioned, tax is a big part of any economy and of course part of our budget. If you look at the need, why government has been introducing the Finance Act across the 3 years, the 2 years that we've seen it come into bear, is really because government is trying to say, I want to give effect to my budgetary plans and my financial plans for the year, right? So how do I finance the budget that I have brought in? If you look at the budget proposal for 2022, we have a budget revenue of about 10.1 trillion naira. And that budget has to be financed one way or the other, of course, to also take care of the expenditure needs that we have identified, which is about 16.1 trillion. So, and if you also look at that budget, about 2.1 trillion of it is coming from taxes. So it is very, very important for government to outline specifically how it intends to finance the budget in 2022, and to even do that much earlier, letting people know what exactly they should expect in the year and how government is going to, the changes that they're going to make across the various tax groups that we have in Nigeria. The first time we had the Finance Act brought in was in 2020, and that was introduced through the Finance Act 2019. And what we saw was a lot of changes across the various tax laws, companies income tax, tertiary education tax, personal income tax. And the changes that were brought in that very first year were to align practices with tax laws, right? And also to ensure that industries and businesses that needed incentivizing were properly incentivized, right? And taxes that needed to be collected where they needed to be collected were done. So one of the very reforms that we saw back then was the expansion of the tax net. I thought it was a very brilliant step or move by government to bring in more people. You know, previously we see the same kinds of businesses being taxed over and over again. But then in 2020, we saw that digital businesses, which hitherto were not paying taxes, were now having to, account for taxes. And all government did was to expand the definition or the criteria for how these companies will be viewed for taxing in Nigeria. So we want to see more of such reforms in Nigeria, taking the tax bucket as we have it now and expanding it, looking at industries, what other industries are probably doing well in Nigeria and who are not paying their fair share of taxes. Also looking at a balance, because it's not only about taxing more, you also want to be sure that you're giving the right incentives at the right time.
Exactly. Karen, allow me to also button here. I would like you to hold your flow of thought and then we'll take a quick commercial break. When we come back, the conversation will continue. Thank you very much for still staying with us. I have on standby Falade, Senior Manager, Tax Regulatory Services Deloitte Touche, and we're discussing today preparation, scrutiny and contributions as we are seeing next year's finance bill come to bear, which will be passed alongside the 2022 budget. Thank you very much for still staying with us, Karen. Now, you made mention of the changes we've seen from the company's income tax to personal income tax, capital gains, gas utilization, incentives, stamp duties, and much more. But one of the big conversations we also have is whether or not we have value-added tax at the rate it ought to be. Now, we have a current peg of 7.5%. Do you see us having an increase within this line, especially in our quest for more government revenue being the focus?
Like you said, an increase in VAT may be a way to look at how to ramp up revenues. But it's very, very important to realize that even though the Nigerian VAT rate is one of the lowest in the world, right, it doesn't really align with the practice of VAT across different jurisdictions in the world. One very important factor about our own system of value-added tax is that we do not give companies input tax deduction across all the different transactions. So what we have currently now is that if you have any VAT transaction, you would only be able to deduct input VAT, which is the tax that you have suffered from purchases. You can only deduct them from, if you're a manufacturer, let me put it that way, if you're a manufacturer or a trading company. But then VAT on services, you don't get to claim whatever you have spent money on. And what that really does is increase your expenditure base in your financial statement. So even though our rate looks low, I think that what needs to be really looked into beyond increasing the rates or even trying to adjust what the rate looks like, let's look at the administration around value-added tax. How can businesses really harness the benefits of a working value-added tax system? What we have now is more like a semi-VAT system, which is similar to the sales tax regime that we used to practice in the past. So beyond looking at the rate, I think it will be good for government to speak around the input VAT issues, which a lot of businesses have been clamoring for over the years.
Okay, now talking about what we also expect, let's look at pioneer status. We've also seen customer excise tariff is slashing the import duty. Some say that from that 30 to 5% means we're stifling the local automotive sector. Others say, well, this is a welcome development to ensure that we have much more affordable vehicles. That's still a contentious issue. But also looking at areas of filing requirements for entities in the free trade zone as well. What sort of waivers, additions, incentives would you like to see in this bill being presented for next year?
Okay, so while I would say I commend government for the reforms that have been brought, it's usually when you're making some of these laws, you're not able to tell the changes that or the impact they're going to have until you have actually tried it. So yes, the incentives around customs were brought in. I think it's for government to keep reevaluating what are the impacts that the incentives that were given in the past have brought in. So you reduce the rates for imports on certain cars and tractors, but what has it really done in terms of boosting the economy? So because the expectation is that whatever we're bringing in laws, they are to have a specific impact. So I would say since we've had 2 finance acts, government should probably do an assessment of where we are. What's the impact, and then you can then determine what is the impact on the local businesses that are here. But of course, it is always a good idea, a better idea for a country like Nigeria to incentivize local businesses. You want to give more incentives so that you can boost local production, which will also impact employment and the rest. Same thing for Pioneer. Pioneer incentive is a very laudable one, but you can do more around that. What we saw was in the Finance Act 2020, primary agricultural business was brought in, which is people who are dealing in crops or livestock direct production, not the people in the inputs. But you see that within the Nigerian agricultural space, inputs are also a big part of agriculture. So it's not enough to just limit it to primary. I would join government to consider expanding this to other aspects of agriculture. Take, for example, people that produce fertilizer. It's a huge input base. They have a lot of things that goes into the production. So it may be good for government to consider giving incentives around that, and a whole lot of other industries, even tech startups right now. It's really something that government should consider expanding in terms of pioneer.
Now, Karen, we are wrapping up our conversation at this point in time. Let's also look at issues clarity in this instance now. Filing of taxes. We had tussles between states and FIRs and a whole lot more. Clarity is important here. Let's call what we ought to do now to action, a call to action. How much of clarity would you like to see in this next bill?
Actually, so filing of returns is actually something that is very passionate and dear to me, because you see that if a company is doing every other thing in terms of paying their taxes at the right time, but then they have issues around filing, that can hinder how they do business going forward. And for us to move in the right direction in 2022, we want to ensure that there's ease of doing business. So I like the fact that you talked about clarity. States and federal governments need to be very clear in terms of the expectation from businesses and even individuals in terms of filing. We want to be sure that when we're making one law, we are not also neglecting other aspects. Take, for example, individuals in the last Finance Act of 2020. Individuals who are within national government's national minimum wage were exempted from paying tax. However, within the law, the same law, they are still required to file returns. So you see that there's a disparity between certain provisions. So I would like to see a more holistic view when making some laws, so that we are not robbing Peter to pay Paul on the other hand. So everything is actually moving in the right direction. So of course, clarity, certainty, and more importantly, low compliance cost. You don't want to have you're filing a return that, for example, costs you nothing. Maybe a tax authority, a federal or state authority is requesting you to file certain returns. That return doesn't have any tax liability attached to it. But for failure to file that return, you are paying astronomical penalties of about 10 million in some instances, 3 million, 5 million. I think it needs to be looked into to say, okay, as much as I want you to comply and file your returns in time, my goal is not to crush you and stifle you from doing business. So it's just to bring that balance. I like the way government is going, but more balance needs to be brought into the tax system between tax laws, between our tax policies and administration.
We need more balance. We need more sanity within our tax system. We need an ease to our tax system and administration in the country. Thank you very much for your time on the show today, Karen Falade. It's been a pleasure speaking with you, and we hope government is listening. We'll keep our fingers crossed as to what will come out at the year 2022.